Hi, my name is Ray Bowman. In this lesson, what we're going to do is go over the financials of a company. And we're going to have an example of a manufacturer in this demonstration. For those of you who take my course for Global Trade Professionals, one of the things we start off the course doing is looking at the basic financial structure of a company so that we can kind of understand how the domestic financials of a company are important to understanding how we forecast, how we look at our capacity and our export readiness to do international exports. This tool is also used at the Small Business Development Center, which I'm a director of. Small Business Development Center is an SBA program that provides free business advising services to small and medium-sized businesses. So this is a tool that we made here at this center to help our clients understand their financials better. So often financials are a big mystery to companies. Most company owners aren't financial managers. Most company owners that we encounter have a fairly basic view of what their financials look like and how they're managed. I also get a lot of questions about, am I competitive as a company financially? Am I bankable? How do the banks look at me? In terms of when they look at me to underwrite a loan. So I get all these different questions. So this tool kind of helps explain what those financials should look like. So one of the things to know about financials is there's a lot of great information out there that helps you benchmark your company or companies like you within an industry and what those different ratios look like, what's your costs, what's your expenses, what these things should look like in order for you to benchmark. So there's two main databases that banks look at. Banks refer a lot to what's called RMA information, and that's the Risk Management Association. So it's an association that a lot of bankers belong to, and they have underwriting guidelines. They have information that they can look at that's industry specific, and based on the loans that they look at, the loans that they underwrite, and so they come up with a series of risk scores. There's another database out there, and this database is accessible through a lot of college and public libraries. It's called First Research, and it's also a very good source of financial data. In fact, the data that I've plugged into this particular spreadsheet comes from First Research. Or is based on it. So there's all kinds of other databases that you can look at in order to find out what a business in your industry should look like financially. So if you look at the line of this spreadsheet right here, what this is a series of benchmarking percentages. So we have percentages for net sale, gross margin, officer compensation, the balance sheet metrics, cash, inventory. Then as we scroll down, we can see a number of different financial ratios. So there's all kinds of ratios that management accountants look at to gauge the health of a company. So what we've done is we've taken these various percentages from First Research and we've plugged them in. Now the problem with a lot of these percentages, when we talk to businesses and say, well, this is what your ratio should be, or this is what your ratio of cash or your gross margin should be, most businesses don't think in terms of ratios or percentages. They think in terms of dollars. So part of the aim of this tool is to use those percentages and get some real numbers out of them that we can analyze. So there's another database that you can look at that we find really useful. So the second line of this spreadsheet is benchmark based on local competition average. So how do you get those local competition averages in terms of revenue, employee count, compensation? Well, there's a great website called sizeup.com. And sizeup.com is a great website. It's free, so it's a free membership. If you sign up for that, you can plug in any particular business in any particular part of the country and find out what those benchmarking stats are, like gross revenue, employee count, and compensation. So in this second line here, we've put a line for that gross revenue. So the aim of this spreadsheet is to take all of these percentages and from that back in using the gross revenue. So here, if I put in 3 million, what this will do is automatically back in using these ratios. So now I just don't have ratios as a benchmark, I have the actual numbers. And so if a company wants to find out based on the average gross revenue for their like businesses or their competition, you can simply plug this in and this will give you an indication of what compensation inventory should look like based on information from census, from IRS, and so on. Now, this area is where you put in your actuals as a company. So here is basically sort of the benchmark. So if you took the average revenue or the median revenue from like businesses in your industry, this is a way of backing into what perfect financials or perfect ratios would look like. Then in this column, if you want to see what your actuals are, the best way to find out what your actuals are is to go through your Schedule C. And what we found at the Small Business Development Center is a lot of companies may or may not have good financial records, but one of the best comparisons you can use is their Schedule C. So this is all Schedule C actual information here that companies can enter. So now what we do is, based on a company's actual revenues, we can show them what a perfect set of books looks like for their company based on their actual revenues. And then you can come up with a difference, and that difference may be a positive or it may be a negative. But now we have these percentage goals that show where you're off. So this is a great way for companies to start to research where they should be financially. Look at what the ratios should be. Look at what the revenue counts, employee counts should be for their industry. Look at their actuals, back into those numbers, and see what the difference is. So if we go through this analysis, we can actually see what those benchmarks look like. In other words, if this is the goal, where is your company against those goals? And this is a very important thing for companies to do. And the reason it's presented like this is, again, most companies, most business owners, they may or may not have a level of expertise with their financials, their balance sheet, and so on. But if you can show it graphically, it really helps. So this is just a way of being able to benchmark. The other thing that's important is to look at your sales and see what your sales concentration is, because banks are very interested in knowing what your sales concentration is. And for most business owners, one of the things you really need to know is, how do you break even and how many sales do you need to reach your goals? So, for example, if you're a restaurant, it's very important to know what's your average plate sale or your average bill or your average receipt, and then how many of those do you need per day. So in this particular spreadsheet here, we have an area to put how many of your customers make up 80% of your sales. So that's important to know where your 80-20 is. The number of total sales that you have, the number of return customers that you have, and the total amount of customers and your new sales annually. So these figures will then populate these sheets so that you can begin to look at what your sales concentration is, to look at what your client turnover is. Client turnover, often businesses don't look at that. Are you retaining clients? Are you getting new clients in every year that are going to replace the ones that you'll lose just naturally over time? The other part to this spreadsheet is a simple benchmark. And again, this benchmark information is is largely based on the spreadsheet on the website Size Up. And so if you look here, here's a way of gauging your company against the national average, or the national median, I should say. So again, a lot of companies struggle with where they're at, so this is a way and a tool of looking at where you're at against your larger competition and benchmarking off of that. And again, in order to do a good benchmark, it's not only measuring these things, but it's creating action plans. So a true benchmark creates action plans of what changes do you need to make within your organization to be competitive against those benchmarks. The next part of this spreadsheet is going over each part of this analysis and not only describing what each part of this analysis is, but looking at where your company is, where your results are against that analysis, and are you over? Are you under? Where are you at? So again, this is just a way of breaking down finances, financial analysis in a way that most businesses can understand. So I hope this is a useful demonstration of benchmarking and financial analysis, at least a beginning to it. And again, for my international students who take our CGBP course, the purpose for this exercise is really to look at those financials, look at those sales, and imagine if 10%, if 20% of our sales are international, that also means 20% of our capacity and our resources need to go in that direction. So again, if you're looking at an international company, all international companies start out as domestic companies with a portion of their business activity being that of international. So I hope this demonstration is a good introduction to benchmarking, and we will see you next time.